This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on April the 15th, 2011 at 8:47 in the morning, Mountain Time, 10:47 Eastern Time. Show runs on 630 CHED in Edmonton, also AM 640 in Toronto. If you ever miss a show, you can catch us at HESradio.com, HESradio.com. The shows are archived there. It was a fantastic week for precious metals, in particular silver doing very well again. And as we tape on a Friday, Harold, give us an update. Where is silver right now?
What a week, Randy. What a week. I'm so excited for everybody. Congratulations to everybody that's in the gold and silver market. I got to tell you, the markets were extremely strong again this week. Gold broke through $14.50. We're trading at $14.8250 on Friday. This market looks very, very strong. We're up over $4 in gold today. Market's been up as high as $7. But it's the silver market that's stealing this show. The silver market is on fire. Silver's up 43 cents as we're taping the show. We're trading at $42.63 with a high of $42.71. Now, we've been saying that the resistance levels in silver were at $38, and it took 3 attempts to break through that $38 level, but once we had 2 closes above 38, the next level that we looked for was $41.50, and the same scenario happened. It took 3 attempts to break through the $41.50 level. We finally did that on Thursday, and now the market's trading at $42.71. So the silver market and gold market look outstanding at this point, and those markets should continue to run, because again, there's just a myriad of problems out there that we're going to discuss on the show, with the biggest problem upcoming, which is going to be inflation. And again, you're certainly seeing that in the oil and food markets. You've got the platinum market trading right now at $1,833 on a high. You've got the palladium market back up to $782. You've got the oil market, which did well again this week. Well, actually, it hit a high of $112. Then you had some talk that things could have settled down in Libya, so the market pulled back to 105, where there was heavy support. It did not break the 105 level, and is now, as we're taping the show, it's back up 31 cents, and we're trading back up at close to the 109 level. I do believe that with the problems in the Middle East, with Bahrain, with what's happening with the rioting in Saudi Arabia and in Egypt and everything like that, I believe we will see a retest of that 150 level in crude, but crude has got to be one of the most volatile markets at this point, because a lot of it, the movements are based on what's happening out of the Middle East. There are shortages of oil, and there's no doubt in my mind that oil will continue to stay high, and if things really heat up in the Middle East, you could literally see by next year $200 to $250 oil. If that's not inflationary, I don't know what is. You've also got the U.S. dollar falling substantially. The U.S. dollar has actually broken the 75-cent level, pulled back today to 74.86. My prediction is by the end of the year, we'll see 71.50 in the U.S. dollar, which is enough to bring the gold market up to 1850 to 2200 and bring silver to the $50 level. Again, we should see a continued strong rally in precious metals. Also, you're seeing a rally in the euro. The euro finally broke that 140 level, is trading actually as high as 144 as the U.S. dollar is continuing to fall. So as a reserve currency or as a flight to quality, normally when there's a disaster similar to what happened in Japan, you see a major rally in the U.S. dollar. This is the first time that did not happen, and again, we do anticipate that the U.S. dollar will continue to fall, because we do not feel that the Federal Reserve will raise interest rates in the United States for at least another couple of years. Now, you may see the odd increase, but they have to raise interest rates tremendously. I'm talking about, interest rates up to 15-20%. I know people may think we're crazy on that, but the bottom line is that that's what needs to happen in order to right the ship. We're already starting to see interest rates rise in China and in Britain. So the fact is that other countries will do the right thing as inflation starts to affect their economy. They're going to raise interest rates and strengthen their dollar. The country that will not do that is the United States, and that's why it's going to be an issue. The Canadian dollar is trading right now at right around 104. So the Canadian dollar is extremely strong. I know that the Canadian government does not want a strong, ridiculously strong U.S. dollar, but let's face it. The currency markets are the heaviest traded markets in the world. That's the Forex markets. And the fact is that if the trend is up for the Canadian dollar as a stronger currency, that's what's going to continue to happen. So as the U.S. dollar continues to fall, the Canadian dollar and the euro and the Swiss franc will continue to increase, and that's what's happening in the currency markets. Now, a lot of people are thinking that we're going to see massive pullbacks in the precious metals market. I just don't see that happening. I think that now that we've got a fairly strong situation with the CFTC and everybody out there knowing that J.P. Morgan and these other banks that have manipulated silver in the past, I think they know if this does happen again, there will be massive lawsuits, class action lawsuits, and the last thing in the world that J.P. Morgan and these companies want at this point is that type of action. So I really don't see any massive pullbacks in the market. Back in 2008 we saw a strong pullback, but we haven't seen anything since. In actual fact, we've seen the opposite, where last July in 2010, the price of silver was at $17.10, and 3 months later was sitting at $30. In fact, it's been silver that has really stolen the show so far this year, because silver has gone from $30 at the beginning of 2011 to $42.71 that we're trading right now. Gold has gone from $14.50 to $14.80. So when we talk about the ratio between gold and silver, and it's been terribly out of whack. The investors were buying gold and not silver, and we've been saying the opposite. You need to own the silver market, not the gold market as strong. So basically, silver is now coming back down to where it should be, and ultimately, before this whole thing is over, we do believe that silver and gold will trade at a 16-to-1 ratio, which is where it should be. In actual fact, before this whole thing is over, we anticipate that the price of gold could be as high as $4,000 to $5,000, and silver could be at $100 to $150 to possibly even $200. So $42 silver is still, in my opinion, a buy, because there is tremendous shortages in the market. Silver is an industrial metal and a metal that responds to inflation. So again, I love the silver market up to $100, $150, and possibly even $200, and the general public has not even started to buy this market yet. That's the exciting thing. If you sat in a room of 100 people, aside from people that listen to our radio show, but if you sat in a room of 100 people and asked how many people actually own gold or silver, I would think that you'll see less than 10% actually putting up their hands. So the next big thing that's going to happen, that's actually happening at this point, is inflation. The fact is that oil and food prices are skyrocketing, and that makes up almost 25% of your income is what you spend on food and oil. So there's just no way in the world that we don't have inflation when it's costing so much more to fill up your gas tank, to fill up your home in the winter, and everything, and put food on the table. So there's just no doubt that we're going to have massive inflation. It's the United States government that is in denial. And that's not just a river in Egypt. I'm talking about the fact that they do not even acknowledge the fact that there's inflation. And you talk to the everyday man and woman on the street, and they're just absolutely dying. They cannot afford to put food on the table. And the higher oil prices go, it hurts the airlines tremendously. The retail business falls substantially. On top of that, the hotel business, the restaurant business, everything is affected by higher oil prices, and there is no doubt in my mind that we're going to continue to see oil prices skyrocket. And if you think that things are getting better in the United States, all you have to do is read the newsletter this week. And if that doesn't open up your eyes to what's really happening in the world financial markets, they make such a big deal on Wall Street about this rally that's happening in the stock market. But what you don't know is back in 1929 and 30 was the biggest bear market of all time. That was during the Depression. Then there was a huge rally in the stock market in 1931, which is almost identical to what's happening in the stock market here in the United States. But by 1932, the fundamentals were low, the markets plummeted, and everybody that went back into the stock market ended up losing all their money. You've got to learn from history, or otherwise history repeats itself. And one of my strongest recommendations is to get out of the paper asset market, get out of the stock market, because we have another opportunity to see this market fall in half like it did back in 2008, where the Dow Jones dropped from 14,000 all the way down to 6,500. If you don't learn from history, history repeats itself. You need to be in the hard asset market. That's why the gold and silver markets are rallying as strong as they are. I'm going to go through this really quickly, but in the newsletter this week, 25 reasons to be absolutely disgusted with the U.S. economy. Jeff Gundlach presents his latest look at the dismal state of the U.S. economy. 9 huge signs the economy is slowing that should have investors freaking out. John Paulson on the worst-case scenario for the U.S. economy. Major economic warning coming from the UK. You got to read about that. It's just what we spoke about with inflation. Neil Ferguson's new presentation on the decline of the West. 14 must-see charts from the epic IMF report on the state of the world economy, and so much more. You've got to read, and you've got to understand what's going on. If you're sitting there in paper assets, you're going to be like 90% of the people, and you're going to lose all of your money. You need to be in the assets for the next 5 years that are going to make you the type of money that you need to make to survive and to do well. And then on top of that, within the next 5 years, I believe we're going to see interest rates up to 20-25%. And if you make the money in the hard asset market, gold, silver, and diamonds, you're going to be able to put your money in the bank, make 20-25%, and never have to worry about investing again.
In our newsletter this week, in the inflation section, inflation actually near 10% using older measure. After former Federal Reserve Chairman Paul Volcker was appointed in 1979, the consumer price index surged into the double digits, causing the now revered Fed chief to double the benchmark interest rates in order to break the back of inflation. Using the methodology in place at that time puts the CPI back near those levels. Inflation, using the reported methodologies in place before 1980, hit an annual rate of 9.6% in February, according to Shadow Stats. John Williams. We have that story in our newsletter. You can read it. To invest in precious metals, the telephone number 1-866-623-2002, 1-866-623-2002. You can call that number as well and get our free weekly newsletter. The website is wwpmc.com, wwpmc.com. The telephone number 1-866-623-2002. Since 2001, gold has resumed its role as a store of wealth, protecting you against the decaying purchasing power of paper money, which is being printed every day by governments around the world. You are being debased. And as events around the world change daily, as we have seen, you need to use precious metals and diamonds to protect your wealth and use inflation to your advantage. We know it's coming. Obviously, as John Williams said in that report with CNBC, it's at 10%. Use inflation for your advantage. Turn inflation into real wealth by investing in hard assets and stop the destruction of your paper wealth, stocks, bonds, by investing in hard assets like gold, silver, and diamonds. Turn paper assets into hard assets for real wealth. Learn all about it by calling 1-866-623-2002, 1-866-623-2002, the website wwpmc.com. It was interesting. David Rosenberg of Gluskin Sheff said this week, gold and silver, when normalized for the money supply, when you take into account the money supply, could easily double from where we are right now and even enter into a bubble zone. David Rosenberg, very, very bullish on precious metals. Mark Faber, and he was interviewed by CNBC. Gold is still cheap despite record surge. The Federal Reserve's money printing policies continue to make gold an attractive investment, even though it has hit a succession of new highs recently. Mark Faber, author of the Gloom, Boom, and Doom report, told CNBC. Faber, sometimes called Dr. Doom for his contrarian investment perspectives and offered dour views on the economy and stocks, rejected the notion that gold is in a bubble, even as it begins to approach $1,500 an ounce. In doing so, he related a story from a conference he attended this week where he asked the investment professionals in attendance if any had more than 5% of their personal assets in gold. No one raised their hand. If it were a bubble, a lot of people would have gold. A whole world would be trading gold 24 hours a day. But I don't think it's really a bubble. I think gold is maybe cheaper today than it was in 1999 when it was at $252. What makes gold such an attractive investment is due in part to the Fed's move to keep U.S. interest rates